Alright guys, I'm not gonna let the intro be too long. Alright. Why? That's just cause we're gonna go through a lot of different cool you know real go to things today. So first of all, like this presentation will be about two real important things. First thing first, it's gonna be about how you collect data and how you turn pretty much your intuition trading and how you turn it into a more mechanical trading edge, which has statistics backing it. So the first thing I'm gonna show y'all is how I collect data and how you guys should collect data, and it will be very important, right? It's gonna be important for many different reasons. We're gonna cover all of them, um, but let's just go right into it. So, um, conquering new realms, right? This is pretty much what I want every single one of you guys to do. Key takeaways from this call is pretty much that if you have no data back in your system, you're trading blindly because you don't know if you're profitable or not, alright? You don't know if your edge is profitable or not, alright? A lot of people say, oh yeah, it's my psychology which makes me unprofitable. But here's the thing, alright? Uh, it can be your psychology, but the people which says that it's their psychology is the people which don't have a data-backed system. Because if you would have had a data-backed system and a mechanical trading edge, what you would need to do is just to follow the bigger process of the things, right? You would just need to execute, place the stop loss, place your take profit, and take partials, and just let your overall system play out longer term, right? And then you will be profitable, all right? Here's the thing, all right? A lot of people, which I've met, right, don't have a data-backed system, and if you don't have a data-backed system, you're unprofitable. Simple as that, because you don't know if your system is profitable, and you don't know if your system, or you don't know if your system is unprofitable. All right. The psychology issues will be pretty much you executing on that system. All right, and what will happen is that you will have a much easier time actually executing on that system, given the fact that now you have statistics back in your system. What I mean by that is pretty much that now, instead of really thinking of, oh, will my system stop working sometime in the future, or why did I take two losses in a row, or like all of those thoughts, right? Instead of having those thoughts, what you guys will have is pretty much, you guys will instead start thinking of the bigger picture, which I included in here. So you will pretty much understand what makes a trader profitable, and you start. What I mean by bigger picture, by the way, is pretty much that the bigger picture is the whole system playing out longer term, meaning you start thinking of the whole system rather than the individual trades you're taking. So maybe you're taking three losses in a row. Yeah, instead of stop thinking and worrying about those three losses, you'll think of like your whole overall system playing out over a prolonged period of time, and you will actually know that you're profitable over the prolonged period of time because you have statistics telling you you're profitable, instead of thinking like you don't really know, because you don't really know how your system have played out prior, right? So if you're profitable systematically, you should be profitable. If you have good psychology, of course, psychology is really important. However, it will be much easier for you guys to have or become profitable if you have actually statistics behind it, because then you'll also be comfortable, uh, letting your system play out, because you know you're profitable statistically, and then you should be profitable, in the markets as well, right? And this is pretty much what makes a trader profitable. And this is how you minimize randomness. What I mean by randomness is pretty much how you minimize long winning streaks and how you minimize long losing streaks. And now a lot of people will be thinking, but what did you say about long winning streaks? Of course you can have a long winning streak overall, right? Because you will have more of them once you actually have statistics behind your trades. Because let's say you have like 60% win rate, right, on your system with an average of 1 to 2 RR. That's like a silver bullet. Like if you backtest the silver bullet model, that's pretty much how the silver bullet most often of the time plays out, when you have an overall bias playing out with it, or incorporated into it. All right, and when you understand the drawn liquidity. That's pretty much the statistics behind the silver bullet, right? Once you actually have uh, traded longer term, right? Maybe shorter term you would have like 70-80% win rate, right? But here's the thing, your statistics will change over the prolonged period of time, and they will become more accurate um, the more sample sets you have. And we'll go through sample sets, we'll go through how you create your data collector, we'll go through every single thing so you don't have to worry at all. Alright, yeah, you will understand the big picture, and will make you understand pretty much in the ins and outs of your system, because for you to make a mechanical trading approach, what you will need to do is that you will need to, which is the next slide, you will need to pretty much define your system in a way that it's um, you know like um, defined properly, so you can actually collect that data on it. All right, meaning you don't have any intuition parts into it. Of course, you can have some intuition, because trading intuition will always be there. However, what you want to do is minimize the intuition and maximize the like a mechanical approach to the to the trading system. And how you do that is pretty much is that you define it in a way that makes it possible for you to collect the data on it and minimize the randomness, like I told y'all, because that should be your goal. And that's pretty much how I became profitable, by the way. So I became profitable simply by collecting data, even though I did not start with demo like I should, and like I recommend you all to do, because you pretty much lose less of a money, right? You lose less money. Um, yeah, but let's just go into it. Let me just stop the ramble. But number one, right? Create yourself a way of collecting data. We'll show you later. This is what I'm going to show you after the slide. Then after that, you should define your trading edge into a systematic approach. This is pretty much what I'll try to explain at the beginning of this slide. Define it step by step so it becomes a process. This is what I got to show y'all. All right. Collect forward tests of the trading systematic approach, and I'll explain this later as well. After collecting 10 sample sets, go through them and see if it's profitable. We'll show you later. And what I mean by that, after collecting 10 sample sets, I don't want you to just collect 10 sample sets and then think you're profitable, because it takes, I would say, more than 1,000 to define profitability over a prolonged period of time. Now you can just pretty much collect 1,000 in one day, because your trading system will not play out 1,000 times in one single day. Maybe if you're like a 10-second trader or whatever, or 1-second trader, if you're trading on like the 1-second candlesticks. However, what you should do is that you should collect pretty much as much data, forward test the data, right? Because I don't want you guys to go into live funds and test it, because you don't know if you're profitable yet. Like, of course, if you know you're profitable, then you should have already done this. So like, this only goes for unprofitable traders, right? And it will also be important for the profitable traders, because I'll show you how I collect that data, so you maybe can improve your data collector yourselves. But as you know, 10 sample sets, like I want you to go through 10 sample sets, right, of your model, of your systematic approach, and then pretty much after those, I want you to look through the data. So after all 10 sets, you look through the data. You can have also 2 sets, like after you collected 2 sets, but I would say it depends on the trade frequency. So if you're a very low frequent trader, like your system plays out, low time, right? It plays out an lower number of times. I would definitely recommend to increase the frequency you're looking at the trades, or looking at the whole system. Um, like, increase the frequency there. However, if you're an high frequency trader, I would definitely recommend you to go through it less frequently, because you'll collect more data, and the more data you have, right? Because you get the more data, given that your system plays out, uh, more number of times, right? Give it an X number of time, right? I suggest you to go through. Of course, you can go through it frequently. However, like in one given day, maybe you take 3 trades a day, right? You'll get so much data, right? And it's super important for you to collect the data, and that's why pretty much your emphasis should lie on go through the data as well, but you collect the number of data at yeah, you get it. So you just go through it, like when you have collected 10 trades, that's like 3 days of data. uh, just go through it, right? And just check if your system is profitable, what you need to improve, pretty much. The average stop loss, average RR, average win rate, the number of confluences you have, the bias, etc., etc., every single thing. All right, go through them. Then pretty much collect between 50 and 100. This is just a low, right? You should collect, like I would say, you should have a defined edge by the 1,000 sample set, meaning you should know if you're profitable or not when you have collected 1,000 sample sets, right? Of course, should understand this. However, 50, 100, right? Uh, like it's a low baller, I would say. You should have more than that, but it's good if you could begin with like 50 and 100 forward tests and define your trading edge, see if it's profitable, see if you're unprofitable, your systematic approach is unprofitable or profitable. Uh, and then after each test steps, you go through your data, right? That should be, beginner plan. That should be, number one goal for once you begin with this as well. So yeah. Now, without further ado, let's just go through the data now. Alright guys, so now we're here in the Notion. This is pretty much what I use to collect the data. This is what I use to pretty much collect all the data to turn my system from an intuition based to a mechanical trading edge and with systematic approach. And how you do that is very simple. So you go here, create new page. After you're here, and this is when you have loaded up Notion, of course, you go to table, right? You could choose whatever. However, I use table myself. And in here, right, what you could just title it here. I suggest you to have number trade right there. And this will, of course, I'll go through mine as well, so I'll show you, but this is just an example of how actually you're creating it. So I wanted to just quickly add that in so you guys understand how you pretty much collect that on it. And here you can just add number trade, right? Like which number you're on, right? So for example, you take one trade, yeah, number one, your second trade, 2, 3, like you get it, right? In here you can also add tags, right? And tags, you can add confluences used to see which PD array or whatever actually works the best for you. So you can maybe add favagap or whatever, right? This is just purely examples. Then you can add date, persons, files, and media. This is what I definitely suggest. So you can pretty much add in from your trading view. You can add in pictures or whatever from the trade you actually took. And I'll go through pretty much mine. So let's just actually load up so I can explain all of the things I actually annotate my trading model. So let's just scroll down to an example. Let's just scroll down to like the 50. Yeah, let's just scroll down to this. So in here, this was a 2nd of May, and this was USD, and I'll show you pretty much all the things I annotate. So what I start annotating is pretty much the number of trades. That means pretty much the the number which you're on, like number of trades. Of course, this is my old, so I have plenty of other data, but this dates back to like 2023 when I actually started creating it. So you can see I'm a fairly low frequency trader, and I look at my data very frequently because I look at it actually every single day, right? Why? Just because then I understand my model fully, and that's pretty much what you guys should do as well. So date, pretty much when I took the trade, the specific date, and I'll show you why that's super important later. Then the given pair, right? That's also what I have annotated. The pair I took the trade on. Then which time I entered the trade, so and the trade played out, of course, or when the trade played out. So if it played out over a period of the whole day, I would annotate all of these. So maybe I entered during London Open, I would annotate, and I exited at New York PM, I would add in all of these. All right, so you understand me, right? If it goes over multiple different days, I will just write it at the end, because at the end you can add, annotations as well, but you can also add pictures as well from your trading view, and I'll show you pretty much what I think is beneficial is that actually annotate your trades and actually annotate the thoughts you actually had during the trade. So like in the fair value gap, just annotate what you're thinking of that fair value gap. Like there is a little bit of text you can add in. Just add in some text or whatever, and then just once the trade is actually done, just take a screenshot of that and just add it in at the end. Because here you just have the hard data. However, what you also can add in is your thoughts or whatever if you would like that. However, I just collect personally hard data because I don't really need to focus on my psychology. Just because it's inbuilt. So as long as I just take the trades, I know I'm profitable, right? So I don't need to worry anymore. Like I've done this super a super long time, right? So you don't really need to worry. Now it's just for me to just execute on that given system. All right. So we had medium new news. And what I mean by that is pretty much that's when we have some red folder news. However, it is not dangerous red folder news, meaning I can still trade it. Then we have non-news days, big news days. What I mean by big news days, pretty much 5 or more red folder news days in one given day. Then I annotate it as big news days, and of course we then have CPI days, PPI day, FOMC day, and not for payroll day, which is a little bit special. But I trade on all of these three. Some of these I trade on if I'm sure where the news will go. However, most of the time I don't really know where the news will go, because I don't have that confirmation, and then I don't trade news. However, if I know pretty much for like if I have the certainty where the news will go, like a clear drawn liquidity, clear uh, alignment as well, I'll go for the news, because news is pretty much just an influx of liquidity in that given direction. Then, however, right, for the latest not for payroll news, uh, of course, you can still have a bias of where you think the news will go, just because bias is bias, right? However, bias cannot hurt you as a trader. All right, bias is just there to show you and give an indication of the focus liquidity you're going to focus on, and the focus points you're going to focus on, and then you pretty much execute on that, and the execution on that's what's important. All right, so hopefully everyone understood what I said, but let me put it in this way. All right, as long as you don't risk any money, what's the danger of it? Yeah, there is no danger. All right, meaning your bias cannot hurt you. All right, anything you don't put your risk on cannot hurt you. All right, it will just improve your trading. Market structure, pretty much market structure can be any of the price action models or whatever, but it can also be just a model playing out a higher time frame, specifically an IPDA program. You guys don't know what an IPDA program is. However, market make buy model and market make sell model is IPDA program, by the way. Then we added in the bias, and this is the institutional order flow on every given time frame. So we have the weekly institutional order flow. For this week, it was bearish, or for that given week. For that given day, it was bearish institutional order flow. That given 4 hour was bullish institutional order flow. 1 hour bullish institutional order flow, and 50-minute bearish institutional order flow. Then my overall bias, just because we're wearing a market make buy model, and I thought maybe it would retrace into a given drawn liquidity, which would be an CB, right? So that would be my as you see right here, a CB. So the overall bias, right? I would be bearish in here. However, I wanted to trade a manipulation upwards to that CB, right? And then I was expecting the market to go lower, right? So my focus liquidity was actually on that given sell side liquidity. I think this is wrong. Why sell side liquidity? And it sells liquidity in two forms, right? So this is what I annotate as well. So what is my focus liquidity? And focus liquidity is pretty much the liquidity you're focusing on, because it's the liquidity which the IPA needs to take out or sufficiently balance out for it to go to and manipulate to that area, which is the drawn liquidity. Now it can be sell side liquidity, and it could be also an buy side inefficiency. All right, buy side inefficiency. This is why I annotate just sell. All right, it's the sell side delivery, either to an pool of sell side liquidity, or a pool of buy side inefficiency which need sell side delivery sufficiently, to sufficiently balanced out. All right. So my higher time frame John liquidities, I also annotate my John liquidity number one. Then we had an equal highs, which I was targeting, buy side liquidity, and I think this was equal highs in the form of an original consolidation throughout this market maker buy model. We had buy side liquidity, of course, and we had a CB, all right, which I was targeting, and that CB would be the CB I would trade downwards then after that, all right. So then we had overall my higher time frame key deviation point, and what I mean by that is pretty much the higher time frame confluences which supports us going higher. In this case, it would be a busy, alright, buy side imbalance, sell side inefficiency. Alright, so which is placed into the sell side I was focusing on. Sell side is important if both sell side delivery and sell side liquidity is important if you're bullish, right? That should be your focus liquidity. Hopefully you understood now. Focus liquidity. I always get a lot of questions about from my students about those things, right? And that's why I explain it to you guys, because I think you guys will have the same, number of questions as my students, because this is just what students see, right? Like this is your first lesson when I actually show you some student stuff. Yeah, and then pretty much we have confluences. Confluences for this trade was Asia range, you know, Asia range time-based liquidity getting taken out, and London range time-based liquidity getting taken out. Re-entry confluences. So after taking out the sell side, what did I re-enter on? What was my entry? So my entry was an OTE BPR. All right, and BPR in OTE. Then which time frame did I use, or which time frames I used? 5 minutes, and pretty much I executed on the 5 minutes. So what I also annotate is my stop loss placement, the number of pips. I use this for two different things. I use it to calculate my average stop loss, when I lose, and average stop loss when I win. And for me, it's pretty much the same. So I have 50-50, right? 50-50, and that means my data suggests that I should just keep it, right? That's how you calculate if you should keep it or not. So if you have the number of, let's say you have an average of big stop losses, or let's say there is a difference between the average win stop loss and average loss stop loss. What would be that? All right. So of course, what's most probable is that your smaller stop losses would get stopped out more frequent, right? And your bigger stop losses would be have more frequent winners, and then you should focus on pretty much what's the median, what's the most profitable, because you have to look at the curve, right? And what I mean by that curve, and on the profitability curve, right? And this is the real profitability curve, where you actually have uh, win rate and compare it to risk to reward, right? And you'll need to find pretty much where you get the slope downwards. I mean, you need to find where pretty much your slope starts, right? And you can calculate on Excel or whatever. But we don't need to go into the difficulties of calculations. But you can pretty much calculate the curve, and when the curve starts, sloping downwards and starts, getting in the opposite direction, that's when your best stop loss placement and best risk to reward, best win rate is. Anyways, take profit number one. Take profit number one was 10 pips. Take profit 2 was 30 pips, and take profit 3 was 46 pips. And I take multiple partials, by the way. So I took 4 partials in total, with a total risk to reward was 1-15. Oh man, I get a lot of high RR trades in here, or over this period of time. I think May was actually my best month. But let's just go into it. So 1-15. So we can load up the pictures in here. This was pretty much the CB I wanted to trade into, as you see. So we had a CB right there. I was thinking we would trade up to like the constant encroachment of that. So that's pretty much what I thought we would do. Next picture. Yeah, it shows just that we would go lower a little bit, but it also shows the times, etc., etc. I entered in, and it also shows, of course, the DXY, right? So here it pretty much shows the execution. So in the lower time frame, this was the things I annotated. This was pretty much all my terminuses, and you can see pretty much they're interlinked with the other confluences on the higher time frame. So yeah, this is pretty much what I targeted, right? And then pretty much we have that on a lower time frame, right? So we have this pretty much on a lower time frame. Pretty interesting, right? Pretty interesting. Um, and yeah, these are the things I annotate. You could also annotate a lot of other things, right? So what I suggest you to annotate as well is pretty much annotate your um, like I told you guys in the beginning, right? Annotate the things, right in the fair value gaps, right in the different, terminuses you have, and sell side and buy side liquidities you have, you're targeting before and after, right? Write in those, like you have a little bit of a text, right? You can write in those given uh, I don't know what it's called, like instruments, right? Write in those things and annotate the given things you should focus on, right? So maybe you're pretty much uncertain about that buy side liquidity getting taken out, then write that in that text. That's pretty much and this was maybe not the best example. However, it covers, what I annotated in the things. And what's most important, right? Before I did not even have this. I did not even have the pictures, because it's not the pictures and it's not really the trade which is important. It's the data which you collect. It's the data, all right? It's just the win-loss, average RR, number of trades, number of confluences, and time as well. Time is super important. But also news days, bias, order flow, etc., etc., and also the given confluences you have. That's what's most important. That's what you should focus on. It's not how the trade looks. It's the number of confluences, number of trades, number of frequency, number of news events, number of dates. The date you're trading, the time you're trading, the structure you're trading. That's what you should focus on. That's what you should annotate. All right. Then the rest is just add-ons. Right. The pictures in here. That's just good. Adding into it so you can literally just go back and seeing which trade it was, right? So now we're back. So the thing I'm looking at for this week, right? The thing I'm looking at, and here we have the DXY on the 1 month chart, right? So on the 1 month chart, this is just a plain chart, right? However, what you quickly can see is that maybe it looks like a market making sell model, and this is of course the DXY for 1 month chart. We'll talk about this for many different weeks, right? However, we have been bearish for a long period of time, and we looked for the sell side imbalance, right, to be sufficiently balanced out. We looked for this getting taken out. However, we did not measure up and take that, and we did not even trade into the rejection block right there, which I was trying to target, right? So here we have the annotations. Here is the original consolidation. Targeting, it will probably take a few years to get here, but this is my long-term target, by the way, guys. So we have just reached into this number of times, 1, 2, right, after taking our buy side here and sell side. Whoa, interesting. Went into this little rejection right there upwards. I was thinking it would go into this rejection and then go lower. However, it looks like the market won't do that. Won't offer that. However, I won't change my bias. I still look for this fair value gap right there. And I've provided like what I previously talked about and showed you guys. So what I'm targeting now is this original consolidation, higher time frame, right? I will also have the sell side liquidity, which you can target, of course. Now in the weekly time frame, pretty much what you can see, this is the monthly CB, right? So this is the monthly CB, which we have traded into 1-2 times. What I'm thinking, right? What I'm thinking is that we actually failed the second expansion, like expansion failed. So here we have market maker buy model. It could also be a market maker sell model. Like ICT says, we don't need to finish the second expansion, right? If we just finish the first expansion, right, like we did here, first expansion finished, we don't really need to finish the second expansion, and it can fail. Meaning we don't really need to take out this original consolidation, or it was actually here, or this original consolidation, and it actually can go lower now. And I've actually looked for the low prices, and I'll show you back from the last recording. I was pretty much 19 days ago, and I'll show you pretty much exactly the things I said, and this was exactly pretty much what I tried to explain to y'all. But we're at sell side liquidity. We're trying to target lower time frame or yeah, you know, this is lower time frame for me, but yeah, we have this sell side liquidity, intermediate drawn liquidity we're targeting. Uh, Intra week, right? We can still go upwards and reach for this 5 gap. That's pretty much what I think we'll do after August. And we'll talk about pretty much what I think will happen. So we have this 5 gap, right? This is exactly the 5 gap I'm targeting now. So I want us to pretty much go down into. I'll show you the annotations, but it's pretty much a 50% gradient. I want us to go down to that, into pretty much an inverse 5 gap like we have here. But I think we have on the daily as well. But you could use this one, uh, this mitigation block, this order block, or whatever, right? Whatever, right? Whatever works. There is a lot of confluences overlapping, right? And I think those confluences, given the fact that we've taken out a lot of sell side liquidity, will drive us up here and then continue lower towards the sell side liquidity. So in here, this is the last YouTube video. This was my pretty much annotations. Actually, this was like two weeks ago. So here you have pretty much the DXY, right? I showed y'all. I wanted pretty much us trade up here and then go lower. That's precisely what we've done. So here on the daily chart, this was pretty much my annotations from 2 weeks ago in a call. So I wanted us to go lower, take out the sell side liquidity, and then go higher, reach for this 5 gap. And I still want us to reach this 5 gap and then deliver lower, right? So in here, right, you can see the 50% gradient swing right there. We have pretty much this little annotations right there, this little inverse 5 gap, drag it out in time, and you'll pretty much see this is what I'm targeting. You also have pretty much mitigation block, whatever, order block, all aligning here. And what I want to see us doing now is going down in here, delivering to the upside after consolidating. Right, manipulation after consolidation. Why consolidation? I'll talk about it later. After delivering to this 5 gap, I want to see sell side liquidity getting taken out and also reaching for that longer time frame goal. So this is the seasonalities for the DXY. This is the seasonalities for the US dollar. So what you guys can see now is pretty much precisely on all of the each data sets. Data sets being, you know, 20-year data, 2-year data, 5-year data, 15-year data, 10-year-old data combined, right? You see on all of them pretty much that we usually consolidate during August, and this is precisely what I think we'll do as well. But you also can see is pretty much that we usually tend to create a low and then reach up higher for the rest of the year, which is interesting, right? Which is precisely what I think we'll do for the DXY. I think we'll reach for that 5 gap and then deliver lower prices, right? So now, when you have that, pretty much understand that we should create a low soon, soon to get formed. And what I annotated is this little 5 gap right there. And what I think we'll do is deliver lower. Why? Because the seasonality tells us that. But not only the seasonalities, the externals as well. And I've talked about the externals. If you listen up to the other call, I've talked about that the externals is mixed, and the externals being mixed. You know, guys don't even know what externals is. However, for the externals, right, they are mixed now, and that means is pretty much that we'll see a higher time for consolidation on the DXY. After that, I think we'll follow the seasonalities and deliver upwards for a couple of weeks, a couple of months, delivering to this 5 gap, and then pretty much reaching lower. Not months, but like maybe like, you know, August, and then we get pretty much September delivering upwards, and then November start delivering downwards, March, May delivering downwards, right? You get it. So here, pretty much what I think intraday, I think we'll consolidate right here, and then pretty much delivering upwards, engineer liquidity under here, creating a original consolidation or small money reversal for this pretty much market maker buy model upwards here. But I think we'll fail the second expansion. I think we'll fail the second expansion here as well. I mean, I think we'll just deliver into this 5 gap and then fail, and then deliver lower. And pretty much, I think an original consolidation will get formed in here, given the fact that it's August. And after that, I think we'll deliver upwards, and then pretty much deliver downwards, right? So for intraday, right, you can see pretty much Monday, we just have PMI, right? Tuesday, we just have pretty much no news, and no news here as well. No news here on Wednesday as well. Thursday, pretty much no real news as well. And on Friday, pretty much no real news as well. So we don't really have any news. Meaning, I would think this will be a start of the high time for consolidation and a low settling in for engineering. So pretty much, I think we'll just do seek and destroy programs. I think, however, it will reach this, so I think we'll go lower first, lower Monday, Tuesday, and then pretty much seek and destroy program throughout the rest of the week, and then just continuing, right? So here now on USD, pretty much what I think we'll do, we we have created a swing, or created this price swing. We have actually reached the 0.5% mark of this gradient swing, um, precisely, right? We have pretty much delivered straight to the 0.25, and for the students now, you guys will understand why I had some uncertainty there for actually us delivering lower, because we've gone through two gradient swings, right? We've gone through two great price swings, and that pretty much indicates that we maybe would reach, and fail this gradient swing. However, we've actually delivered upwards, creating this consolidation right here, throughout pretty much a year. And what I think we'll do now is actually delivering upwards and then downwards, actually taking out this low. So here you have a fair value gap. Here is just assume the inversion of it. I think in the next you'll be even more zoomed in, but this is the weekly chart, of course. And I think we'll pretty much deliver upward, taking buy side, and then delivering, taking sell side, and then ultimately reaching for the buy side, like the DXY, just in reverse. So here was my bias, right? I sent out on Twitter, I sent out everywhere, TikTok or whatever. Pretty much here's how it delivered. Here's without the annotations, but here's with it, the annotations, so you can see we reached up for the rejection block right there, took out the buy side, and then reached down lower, precisely like I showed in my buy. So exactly this. So I wanted us to go to the rejection block right there, deliver lower, pretty much reach for this buy side again, because we had a specific level right there. Reach down lower because we're crossing off this, and then deliver upwards. This is the weekly fair value gap, as you see right here. Then pretty much deliver lower. I don't think we'll deliver this lower now. I think pretty much what we'll do from here is actually deliver it upwards, taking this buy side, this specific buy side, right? Leaving this buy side, engineering relative wise, reaching down lower, taking out sell side, and then delivering upwards. So in here, right, you precisely can see this. I think we'll take out this buy side, but we'll engineer buy side liquidity over here. We're gonna create relative wise right here. Right? Why, I can't really explain, but it has to do with August time as well. Then taking out sell side liquidity, reaching down into this fair value gap again, and then delivering upwards towards the 0.25 gradient swing. And that's it, guys. That's it for this call. Hopefully this was a good call. Hopefully you guys liked it. Hopefully pretty much understood it as well, because I think multiple people will have to listen again and again and re-listen. But that's pretty much my overall buy. Thank you guys so much, and see y'all. Bye.